The monies from IMF and World Bank is not good, but they come with stringent conditions. Now with your
even though they come as concessionary rates?
Yes, they come up with, you know, I mean, you can see what is happening in Greece. You have to do this, you have to do that, you have to do some economic, what you call...
those harsh austerity
measures. Now with a Euro bond, if you issue that, it's like issuing a bond. You set out what you want to do, you have where you want to do it, you get your arrangers, like in the case of Nigeria, where we are having Citibank and Deutsche Bank being one of the people to arrange it for us. They will just look at our records, they will look at our capacity to repay as at when it's due. And looking at the back of where we are riding from when Nigeria first did their one in 2011, it was a bond that was issued at about 7.5, and now it's trading in the market at about 4, and definitely that shows that the demand for Nigerian Euro bond was very successful. I want to believe that is, and it's the right timing, because it means that if we're going to come in again into the market, we will not get it at that same price, we'll get it cheaper. And it's good for Africa, it's good for Nigeria as a country.
I think it's set a very good benchmark for the rest of...
Because that is where prices take, you know, we have what you call price discovery. When you are going to have book building for a new opening for Nigeria, you will be looking at what is it trading now in the secondary market, and it's trading about 4.05, so it's just a very good thing. So I'm looking at when we are going to come into the market, which is looking at about September after the roadshow. We should be looking at something below what we did the last time when we came into the market.
Well, let's go back to these foreign investors. Aren't they concerned about the risks involved? We talk about political risks, and I know that many of these African countries that are in the process of issuing Eurobonds or that are thinking of it, some of them are on the list of the Human Rights Watch, the issue of corruption. Many of them are there. So, I mean, aren't investors concerned about the issue of how these monies will be paid back, if these monies will be paid back, if the funds will be judiciously used by these African countries?
What we see for these hedge funds is, if we look at where Africa is coming from, it's probably only one country who was not able to pay their coupons or payments as at when due, and that was Cote d'Ivoire. And we know what happened in Cote d'Ivoire then. There was that thing. Every other African country, talk about Kenya, talk about Nigeria, talk about South Africa, talk about Tanzania, Rwanda, all these countries have made sure that even if there's a change of government, they've kept to what was signed by the previous government, because it's important to build that you know, good rapport, good
track record, as it were.
And track record is very important to do that. So you look at all those countries and you will see that what we have got now is democracy. We didn't have that years ago. And then democracy is a continuation, there's stability in government, and there's reserves being developed, you know, growing. Nigeria is sitting on about 48 billion worth of reserves now, which is really, really good for any other country.
But there are concerns that a large part of that may be hot money.
Well, how much
funds that can exit at any time.
But when we look at what the CBN governor said the last time, how much is hot money? 10 billion? And if you can take that as, we still have 38 sitting on very comfortably.
It won't cause any dislocations to the financial market or the economy?
Of course not. And we must give compliments to the central bank, because they've been able to ensure that they have a good track record of the monies that are coming in and what is being used for. So they are able to manage any shocks that we will see. I strongly believe that there will be no shocks in the economy if those monies are pulled out. Not at all. Because the market and Nigeria as a country has developed its system to ensure that, you know, shocks can be well managed, risks have been mitigated against in those positions.
Okay, let's talk about let's come back home properly now. Nigeria's Eurobond, we had one in 2011. You say that it was successful and still successful. The yields are still have dropped since then. So obviously there's a high demand for that. Now the finance minister did say earlier in the year that there will be another one before the end of September, which you have also confirmed, $1 billion US, and then that diaspora bond, the $500 million US. Well, let's talk about the $1 billion Eurobond. Let's start from the scratch. What the process entails, where do we start from in terms of the pricing and who buys it?
Okay. What we're going to have in terms of pricing, you know, I mentioned that earlier, that the pricing will be driving its position from what the present one is trading now, which is about 4.05. We don't see it going far above what we issued the first time, which is at about 7.5. So we look at it probably nothing, all things being, the same, no challenges. And I know Nigeria wouldn't have any challenges. We should be able to leave it at between 5 and 6, max the 7 is what we're looking at, Nigeria looking at, because it's trading at 4, so why should it go anything more than 6? If you think anything, it should actually not go more than 5. And I think that is why the timing is very right for us to come in now. Now, what are we going to be using those monies for? We're going to be using it for infrastructural deficits. We use it for power, we use it for oil and gas. We would also use it for rails and, transportation, improving our roads, which are part of the government's transformation agenda, so that in the right time will improve our cost of productions, provide job employment, which is part of your fears of, you are saying the security. I mean, if people are employed, gainfully employed, because there are jobs out there, there would no more be any of those security challenges anymore.
Now, on the risk side, because a lot has happened since 2011. I'm sure you know that we're dealing with a bigger security challenge now. There's the uncertainty, a security situation in the north. Aren't investors looking at that in terms of the political risks involved now, coming from 2011?
I'm not sure they're really looking at that, because how much is the security risk? It's not, the security risk is what is common in most part of the world, but it's just that Nigeria for its own is just having it really bad regarding the Boko Haram. But Nigeria as a nation is going to get over that, and that is what the investors are looking at. What are the ratings we have from Standard & Poor's? What are the ratings we have from Fitch? We've retained our ratings. We've actually even improved our ratings to a large extent. So that is what the investors are looking at. And then what we're also seeing is that yes, there are security challenges, but our reserves are growing. We're producing oil, although we're having 1 or 2 issues with our oil, we're still making up our demand.
We're actually looking at lower output. We're looking at force majeures being declared, from time to time. We're looking at leaving the international oil prices. Here, we're still dealing with oil theft, and that has become a major concern actually for the federal government.
But you also know the federal government is also looking at non-oil sectors, which is improving. And I can tell you that the infrastructures are doing very well. Our non-oil infrastructures will supersede what our oil infrastructures have, because we've got the potential. So we've got the people, we've got the potentials, and we have the resources. And that is where, a little emphasis on oil should be taken out. And that is what all these other investors are looking at. And Nigeria is beginning to look at not only oil as their source of revenue, but looking at non-oil. And we've seen it in the last few years that the non-oil sector is beginning to catch up. It's doing very, very well. And that will improve us, what Nigeria has to offer. You're looking at the commodities pricing too. It's doing a little bit better because the demand for it is out there. China is growing, and so they need our commodities. And so you will continue to see us being able to meet our demand regarding repayment of our bonds when it's due.
Now, so it would mean that for these investors, it's not a case of, there's really nowhere else for us to put our money. It's either we'll put it in the emerging China, Asia, or, the biggest economies, or the ones that they think has more potential here in Africa.
Yes, they will look at where potentials are. They will also look at where returns are. They will look at where safety. African safety is not at risk. I must tell you that. I'm very comfortable with what we are offering now in African safety. It's not
like the pockets of conflict here and there.
It's going to happen where we also know that the government is trying to arrest all those conflicts. I mean, it's a period in our life now, in Africa or Nigeria's life, to go through those challenges. As we begin to see, we'll begin to see stability as long as infrastructures and the demands of all the securities are being addressed. We were seeing securities being one of the priority of the government, and that is what investors look at. What are the challenges? How is it being addressed? What are the future plans? What are the potentials of these countries? What are the resources these countries have? And that for us, we have all that going on the positive side. So that, in a long way, should be able to help us in getting us where we are.
Femi, let's take a break at this point. Very good points you brought up there. Let's take a break at this point to come back and look at the banks in the country that are also looking at Eurobond issues. I've been talking to Femi Owupetu, Treasurer at Consolidated Discounts Limited. She's also the former Vice President of the Financial Market Dealers Association. We've been looking at Africa's emerging bond market. We'll be right back.